what's up, good people? It's your man, Investing with Cam. I hope everyone is having a great week so far. And I would like to say a late happy Mother's Day to all the mothers that are out there that watches my channel. And as well as happy Mother's Day to all of to all of the ones that don't have children as well. But as you can see here on the screen, I'm on AIPI, which is my favorite ETF. And as we can see here, AIPI is up 10 cents on the day today. And over the past week, AIPI is up $1.38, in which that's going to fluctuate like any other stock does. But for the most part, AIPI is up over $1 for the past week. And it's at $42.18 right now at this point in time of my recording. And I'm speaking about AIPI because, like I say, it's my favorite ETF. I have several videos related to AIPI. And as long as the holdings that AIPI has continue to go up, then AIPI is going to also go up along with those holdings that's in this ETF. I was initially saying that if the NASDAQ is going up, then AIPI is going to go up, which is true because these stocks that this ETF has are on the NASDAQ, which are technology and AI-based stocks. But this video today is not going to be solely about AIPI. And I also want to state before I get off of this page that I've increased my shares up to 59 and a half shares. I don't remember exactly how many shares I had the last time I posted a video about AIPI, but I know I had less shares than what I have now. And so I am still slowly building my position in AIPI until I can get to that 500 or at least 500 shares to where I can stop investing in it if I decide to, in which I'm going to go a little further in detail on why I may stop investing in AIPI, not only because of the snowball effect being greater at 500 shares, and it's going to take a lot less time to get to the point where I could be making distributions every month to where I don't have to work full time or have to work for anyone in particular and do things on my own schedule. But let me show you what I'm doing, because I did make a video about selling options in which I sell puts. And when I get that premium from selling puts, I was going to take all that additional money and put it into AIPI. But this is what I'm doing now. So let me go over to this screen here. And so these are my stocks in ETFs. And I'm going to start here at Coca-Cola. And so you'll see here where I have Coca-Cola, Realty-O, Microsoft, Main Street Capital, Chevron, Prudential, Stag Residential, J&J, which is Johnson & Johnson. I also have LyondellBasell. I have here Digital Realty Trust. And I also have JEPQ, which is the JP Morgan Exchange Traded Fund, in which the stocks that JEPQ have in it, some of them overlap with AIPI, but JEPQ also has several other stocks in its ETF that AIPI does not have. So that's why I have both of these ETFs in my investing brokerage account or what have you. But back to these 12 stocks that I just mentioned to you guys. So as you can see, I don't have many shares whatsoever of each one of these. I just, as of today, invested $5 into each one of them, in which I'm going to invest at least $5 a week, maybe $10 a week into each one of these stocks, so that I could build up my share amounts in these stocks, because not only are these good stocks, stable stocks, and stocks that pay out dividends and have been paying out these dividends and distributions for years and years. You know, for example, Coca-Cola or Johnson & Johnson or Chevron have been paying out distributions or dividends for some of them longer than I've been alive. And as well, they have only increased in their dividend payouts every year, and which is a great thing. And then I have the luxury of possible price appreciation along with the dividend increases every year, because all of these stocks have been known to only go up in price. They're going to fluctuate just like anything in life, but for the main portion, or for the most part, they have only gone up in share price, which I will benefit from that as well. But also, the way that I have them laid out, because I have these different stocks, each one of these stocks are going to pay out at different times, meaning different months and different weeks of each month. And so for the most part, with these 12 stocks, I'll be receiving a dividend payout every week of the year for the most part. It may be a week or two that I may miss, but for the majority of these 52 weeks in each year, I will receive a dividend payout. And because I don't own many shares of each one and I'm not investing a whole lot, those dividend payouts aren't going to be much. But if I continue to invest and let my dividends reinvest, eventually I will have quite a bit of money invested in each one of these stocks. And I'm still going to be investing in AIPI, because like I say, for the long run, that's going to be the one ETF that I believe that I'll be able to retire off early in life with. In about 10 years, if not sooner, I may possibly be able to retire if I can invest as much into AIPI that I would like to. But my plan is to at least buy 1 or 2 shares of AIPI every week, and then invest at least $60 or $5, I should say, into each one of these 12 stocks so that I could build up my share amounts in these. And so where I'm getting the additional money from is from me selling options. I showed you guys, or created a couple of videos, I should say, recently, showing you that that's what I'm doing now. And it's not new to me as far as selling options. I've been doing this for a few years now. But I sell my options. And so let's just say, for example, if I sell an option, and I'm going to sell an option for next week, if I can make $280 off of those options, I'm going to take 100 of it, put it in my spending account. Then I'm going to take that other $180 and I'm going to split it between AIPI and my other 12 newly purchased stocks here. And I'm just going to do that every week. And eventually, I'm going to build up enough shares into each one of these stocks to see a reasonable amount of money each week from dividends. And then with AIPI basically being the base of my portfolio. And once I get those 500 shares, I'll stop investing in it more than likely, and then put more into these stocks so that I could build up my share amounts even faster into these stocks right here. But that's what I'm doing right now, y'all. And this is not financial advice, but if you like what I'm doing and it's something that you want to do, then by all means, go ahead and do so. Because like I said, these are not some fly-by-night companies that I'm investing in. These have long-standing track records in the market. So I'm not just giving you some nonsense advice, and this really isn't advice. This is just something that I'm doing. But like I said, you can put your own spin on it. You can copy what I'm doing. It's up to you. But as well, things are going to fluctuate, so your money's going to go up and down, but those dividends are going to stay consistent for the most part, because these are companies that have been paying out consistent dividends for many years. But again, it's your man Investing with Cam. Don't hesitate to like and subscribe to my channel. Leave any comments. Let me know what you guys may be doing. But again, this is my plan. And I hope to talk to you soon, and I hope we can make a lot of money together.